Good morning, everybody. Welcome to the Flow Show, Friday, the 29th of November, Black Friday. Are you doing all your shopping? You getting caught up? Getting all those cheap deals that aren't really cheap deals because they ramp the prices up before they knock them down for Black Friday. You've got to know the tricks, boys and girls. You've got to know the tricks. Morning, Kay. You got half your nose stuck in Amazon?
No, I actually went on an early Black Friday shopping spree yesterday because all the Black Friday deals were already on. Yeah, we did a bit of Black Friday shopping. Yeah, not specifically on Amazon though. I warned people yesterday that I was going to Majestics to stock up for my Christmas wines. And if you look at the Naked Wines stock, the owner, it's only 5% higher this morning. So I warn you guys to buy the stock.
Yeah, you can chart that one later, mate.
Yeah.
K-man indicator. You should patent that. Yeah. Good morning to everybody. Michael, I see you in the chat there. I haven't checked back. Has your thing been resolved about getting into the other webinars? Let me know. If not, I'll chase that up. We did find what the reason was. Yeah. Okay. Cool. That's good to hear. That I think it's a bit of a Zoom issue, that one. Anyway, good to see that's resolved. Before we kick off, I just want to make you guys and girls aware of a one Black Friday offer we've got going on at the moment on our TF. Oh, if I can get it down there we go. Our TFP program, trader funding program. You can grab 30% off any assessment there. Just use that code there. Thanks, #30 to get the deal on that one. That's running until Monday. So you've got a bit of time, but don't delay. Get in quick before that deal expires. And what I will do is pop the link into our Zoom chat there for you. So if you want to take a look at the TFP site, you can go ahead. But that's a deal that we've got going at the moment. Right, let's get stuck into business and what's been going on. Not an awful lot, as you can imagine, out the US, but plenty going on elsewhere. We're going to start right at the top with Japan. Bit of data out, different sectors overnight. I'll go through some of the least important ones at the moment. We've got industrial production, which had missed expectations but had a decent jump, though the forward-looking indicators coming in negative aren't such good news. We had some retail sales as well. Year-on-year numbers up 1.6 overall, missing expectations, but still a gain. However, large retailers looking a bit soft there as well. But really, the headlines were in the Tokyo CPI, which pretty much blew the doors off. We saw CPI coming in 2.6% higher than the 1.8, core coming in at 2.2%, way above expectations and prior. So decent numbers there. Now, there is a bit of a caveat with those. And Kay, you might be able to help me out. Their energy subsidy thing finished in October. I don't think they carried it through to November, even though they're going to put it back in again later on. Is that right? So I think some of that.
Yeah, I think the decision should be made very shortly now because they have their special diet ongoing, and I
Yeah.
think there's a few decisions to be made around there. I haven't seen the exact details of it, Ryan, but that's my guess that we are going to have a decision pretty soon.
Yeah, so that may be behind this big jump in the numbers because that ended, that subsidy that's been running for the last, whatever it is, 12 months, 18 months, has ended in October. Okay, so there might be some of those, what they call the base effects or the washing out of that subsidy in these numbers. Not that it's bothered yen traders or expectations for the BOJ. Numbers are hot, and that's all the market's seen at the moment. So that does raise the stakes for a potential hike coming at the BOJ meeting. You got any thoughts on that, Kay? Is the market going to see through these numbers, or does this bake in a?
Well, the market reacted pretty fiercely to it, but I also think that we are we've seen it already earlier. Sorry about it. Earlier in the week, that dollar yen got hammered during Tokyo time. Now 2 or 3 times now. As I think there's a lot of month end still going on there. It's yeah, but it's keeping the door wide open to me. And again, as I said yesterday, hopefully we are getting some hints when Ueda will speak in the diet. He did not take any specific side yet. He said that everything was open, but meaning everything is open is to me telling that I think they go, do it before the window closes. Yeah, hopefully we'll hear soon. But I do think the market reacted to it though.
Oh yeah, absolutely, absolutely. I think it reacted as well, and there's been a bit of a second wind for the yen as well, coming from yields. But we'll look at those in a moment after we got through the rest of the news. Speaking about this special jet session, and it's mainly all about this extra budget, additional budget, because Mr. Ishiba wants to tack on a stimulus package, a fund, if you like, 13.9 trillion yen. That's $92 billion roughly. This is, he says, he wants to keep this cycle going that they've got in getting the economy moving, and it's going to be a pretty big test for him, considering he doesn't have a majority anymore. Whether he can get this extra budget through with his stimulus package on top as well. So
I think he will.
you think he will? Yeah.
It's
Are they all
Japan.
behind it?
It's Japan, and I mean to have seen that the smaller parties kind of agree. When you talk about stimulus in Japan, nobody's going to vote it away.
Yeah, and he also wants to raise the income tax ceiling for fiscal year 2025. So raising the amount before people start paying tax, which obviously might reduce their tax intake. But if they're getting higher wages and higher employment, then they'll make it up on the other side anyway. So pushing, following Kishida and what he was doing. So it's still all going in the right direction for the Bank of Japan, as long as the data plays ball as well. Over at the RBA, this thing's been going on for quite some time. They're going to be reforming the RBA board, how they do things. It's looking, well, it's been decided now that they're going to split the board up, where one half of it will be responsible for monetary policy, the other half will be responsible pretty much for financial stability and whatnot. It looks like a sort of maybe like what the Bank of England do, where you have the MPC side and the FPC side, although it's usually made up of more or less the same people. But there's a lot of guessing going on in terms of what that means for RBA policy going into next year. Chalmers, I think he's the treasurer, is he? Chancellor, treasurer, whoever he is, has said that they will potentially apply these reforms after the February meeting. So we've got some time to go. But as I say, people are doing a lot of guessing in how this might impact monetary policy. Are there going to be different people on the monetary policy side? Are they going to bring more in, let people go, shift them across, or whatever? So it's a bit up in the air, but that's what's coming. ANZ now think that the RBA will start their cut cycle in May. That's a change from their prior call from February. So they're probably taking that into account, this change in the policy committee over there. Over at the RBNZ, this sounds like a little bit of a slapdown to what we heard from Silk yesterday. She was talking about maybe they're going to discuss a 25 or a 50 for their February meeting. Hawkesby, the Deputy Governor, says RBNZ has clearly signalled a 50 basis point rate cut in February. Says the economy in New Zealand is turning a corner. ANZ jumped on the back of that. They now expect the RBNZ to cut rates by 50 pips in Feb. No shit, Sherlock, after the Deputy Governor said it's going to be a 50. Yeah, sounds like a bit of a slap down of silk yesterday. Coming over to some of the data this morning, we got a ton of data out from the Eurozone, all CPI data and whatnot. Firstly, we had, yesterday we had the German numbers after all the regionals, which came in a little bit softer than expected. CPI was due to come in at 2.3, came in at 2.2, still up on 2% last month. The EU measure, harmonised HICP, came in at 2.4%, unchanged, was expected to rise to 2.6%. This morning we got some import price data from Germany as well, a little bit on the warmer side, month on month coming in 0.6%, year on year, not down as much as it was last time or as expected. Retail sales, not much fun there, coming in at minus 1.5% month on month, year on year, much softer than expected as well. That's October numbers, so maybe the Germans are keeping their wallets closed for the big sales month this month. If retail sales are crap this month, then it's going to just add further woes to what we're seeing in Germany. France, they kept the CPI party going, higher CPI, but not as much as expected. The year-on-year number was expected to jump to 1.5%, came in 1.3%. The Eurozone measure matching expectations at 1.7%. So that CPI number, as I say, not quite up there, but it is still another rise. GDP numbers coming in as well, a little bit softer on the year-on-year, 1.2%, but unchanged, 0.4%. Coming down the list, German unemployment as well, 7K, so less than expected. Unemployment rate unchanged, nothing to see there. UK data, we saw mortgage approvals coming in at a nice beat, 68.3 thousand. The Bank of England consumer credit number, which is one I keep an eye on to see if there's anything untoward going on with the credit cards and whatnot, dropped to 1.1 billion from 1.3 expected and 1.2 prior. So not seeing anything going on there. Can't even take a pause for breath for a minute. Right, so much data. Right, Italian CPI as well, coming in pretty much bang on the money, though the Eurozone measure was a pip higher on the year on year. Finally, down to the Eurozone number. Headline CPI went up as expected to 2.3%, matching expectations. The core number, though, stayed unchanged. Was expected to rise a pip as well to 2.8%. Now, all this data, Eurozone data, doesn't, in my opinion, doesn't really change what's coming from the ECB. I still think it's going to be a 25, but there is a growing bum fight going on between some of the members at the moment. We're getting hawks turning dovish. We got others staying hawkish. We got doves going more dovish, and I'll read those out in a second. But for me, this data keeps them in a 25 camp. The risk for them is whether they want to go more on the economic side of things, because obviously economies aren't looking too great at the moment. Another piece of data we got on inflation was the ECB inflation expectations number. 1 year expectations jumped to 2.5% from 2.4. It was expected to drop to 2.3. 3-year expectations stayed unchanged at 2.1. So expectations is something that the ECB factor in big style into their ruminations, shall we say. So that step up won't be welcome to them. Right, the ECB bods, and then I'll bring Kay in to give his view on the data. Vilroy is one of the ones who's getting a little bit panicky, perhaps. He said that the inflation victory is within sight. That's a repeat of comments. He's seeing the risk of an inflation undershoot if growth stays weak. He says interest rates should clearly go to a neutral level. The ECB has significant room to remove restrictive policy. Says he wouldn't exclude going below the neutral rate in the future. There's every reason to cut rates in December, and the ECB should remain open on the size of a December cut. So negative rates should remain in the ECB toolkit. We're getting this, as I say, a lot of loud opinions, shall we say. Villeroy very dovish, Schnabel was less so. Nagel the other week was showed his dovish feathers a bit. Okay, it's all ramping up a bit. We're getting this. I think we're now starting to see a fight between those who want cuts for growth and those who want to keep it for inflation.
Yeah. I'm going to say the interesting bit was Lagarde not taking any stance. He was just talking in that interview about what Europe should do. I still think that if you look at the growth data, they should do 50, but it's not only about growth. It's about psychology as well, as much as growth and sticky inflation. I think the inflation is actually less of a present problem right now. But yeah, I think Villeroy, don't forget he's French, and he sees what the mess is all about in France. So he looks to be a bit panicking. Yeah, but we've been talking about it. My base case is still 25. 50 would be a bit of a surprise, but not to be ruled out. I still don't like the euro. Whether they do 25 or 50 won't change too much. Yeah, we're probably gonna get an algo blip if they do. It's more like the dollar side, which would perhaps decide on things. But for the euro side, no, I still think Lagarde wants to wait until Trump is in the seat, and does a month or two. Will a month or two change anything to real economic data? I'm not sure. They will cut 25, and well, at least they will cut, and that's it for now, I think.
Yeah, I think I agree with that. And just as you can see at the bottom of the calendar there, we've got Bailey speaking now. As you can see, just before he speaks, it's the financial stability report. So he will be speaking with that hat on. So while he may mention monetary policy, I doubt he will give any heads up to future changes to policy. But it will all be about, scenarios if they do this, if they do that. So, as I say, he'll be speaking with his financial stability hat on rather than his monetary policy hat on there. The rest of the day, we've not got an awful lot. Canada GDP, the Yanks are still deciding to take it easy for the rest of the week, take a long weekend as they often do for Thanksgiving. So really, we've got this GDP data coming out from Canada is about all the data we're going to get. OPEC is apparently discussing punting their oil output hike for Q1. This is on top of rumours of what they were going to do earlier this week, late last week. They were going to kick it through a few more months. So it looks like Q1 is the duration of when they're going to kick that can. The Israel-Lebanon stuff, I don't know if there's a peace deal in place, a ceasefire in place. There's people still lobbing stuff at each other. That's all just turned into one big mess. We'll see what if that escalates or comes to something, but everyone's still talking about ceasefires and whatnot. Putin, though, on the Ukraine side, has warned that if Ukraine becomes a nuclear power, Russia will use all means of destruction. There is a lot of rhetoric going on between the West and what they might put in other countries. I think there's talk of putting nukes back into Poland, I think it was, or missiles into Poland and on borders. So we're still in this geopolitical strife that's going on, and we're at a much higher escalation level than we were some weeks ago. So factor that in, particularly going into weekends as well. That's it for me. Kay, you got anything else?
No, I think we covered enough on this Black Friday, Ryan.
Yep. We can all have an early one perhaps today. It'll be nice to get out and about. Right, let's have a look what's going on. We'll start with dollar yen. This was the move that we got last night. CPI data, as Kay says, potentially some end of month stuff going through there as well. What it's done is it's taken us through the 38.2 fib. So this is the steepest pullback we've had in all this rally that we've seen from the 139s. So it's indicating that the tide may be turning somewhat in terms of the overall trend, but we shall see. Pretty significant that we couldn't get through that 152 yesterday, and that's now reinforced that as the level. So I think it's a bit difficult to gauge this one at the moment. Is it end of month? Is it the Bank of Japan? I don't know. What I am keeping an eye on though is yields, because this could maybe be a bit of a decider. 10-year yields have been tapping this 420 level. This is nearly as important as I was telling everyone the 450 level was going to be when we got up there. So we tapped that, and that was the top. We've come down. We've hit a decent level that is 420. If we go through that, then the dollar's likely to suffer more. Dollar yen's probably going to come down a whole chunk more on the back of that. If we hold this, it just could put the brakes on dollar yen and the dip for now. But I speak about this often enough. When you get these end of month periods, you have to really see how you close out the week and see what happens when you get into the new month, because you don't know if this is all just end of month flows or if this is something more. If it continues next week after end of month is all said and done, then you've got a bit of conviction that it's something more concrete. But for me, I'm just not sure at the moment. Kay, do you think this is a significant change, or are
Well,
we?
what I've been saying for a while. I think we're going in a range. 450 was a bit too high for me. Now we're back at 420. We may go back to 4% and then find that a bit too low and come back to 420. Seems like 420 is about where the market feels like we need to go in when Trump takes the seat. On the tip of my toes. Yeah, that's about it. Then we will have to see what he does with all the tariffs and things. I've also been saying that the market will probably react a, a bit outsized, perhaps, to whatever he's saying, he's planning. Yeah, I think we're kind of somewhere around the equilibrium level. But as we know, December is always a bit of a strange month as well. So if people need to rebalance a lot of what they did on the expectations of the Trump trade, you can see a move down to 4% or even below, and before the end of December, and then start again a new chapter. I'm always sending people back to what happened in 2023, and U.S. data were good. People were a bit underinvested on stocks. I don't think that bit of the equation is still the case, but we can't rule out a bit of a remake of what we saw in 2023. In which case, you're going to see those yields come off, stocks remain underpinned, and the dollar being on the defensive somewhat. So yeah, I think the play is open. But for what yields are concerned, 380 seems 375, 380 seems a bit low, and 4.5 too high. So here we are around 420, and I think, as I said, that's about my balance level.
Yeah, very much so. And yeah, I think it's going to be key, particularly for today. We expect, don't know what happens in December, like you say, but I think it's going to be key today. Dollar yen's just having another little look under 150 at the moment. So let's go back onto that one. So yeah, we're turning around this 150 area at the moment. We had a low 149.54 before we recovered. So yeah, we've got a bit of a level in here, 150. It's a is a big psychological number, always has been. And we were here in October and we're here again. So yeah, take your clues from this one, whether we're closing below it or opening or closing above it come the end of the week, end of the day. And again, watch out for potential risk, people taking risk positions off the table going into a weekend. Cable joined in the party this morning, and we saw quite a bit of dollar selling going on in the early part this morning. We got an early spike up through 127 up to 127.50. That's washed out now. It was trying to hold this 127 level after that move, but that's looking like it's washing out a bit now. So that's being dragged back down again. This is a bit like what we're looking at in euro dollar up at the 106. It needs to get above here and hold above here before thinking about pushing even higher. If it fails, then we remain bearish and we probably go back into the 125, 127 box for a while longer. So again, look at this one for a closing basis. Euro dollar, that got up for a little test, and I was a bit worried. There's a few of us a bit cautious this morning that based on that dollar selling that we saw across the board, this might be going for a little moon shoot through, because there's a lot of people waiting to short it up here. I was looking to short it 106, but I was already in the other day at 80, give or take a bit of change. So I'm remaining a bit cautious about adding to my shorts just yet, just in case we get a bit of month-end blow through, knocking out everyone who wants to short there, going through 30, 35, taking the stops, and then it comes back down again. So just got a bit more caution today, I think, but I'm still potentially looking to get a bit of a short build going in this one, just based on the fundamentals and what the ECB doing and where the US is. What is my concern, though, is I'm trying to short down here after an already decent move. So I'm going to keep my trade fairly small. My piece is very light, and I'm not going to get too excited if we don't break up further. But otherwise, again, if we close the week above this 105.30, I think it's going to give this a decent base to build on down in this area, and then maybe we're going to get a move back up, because if it can't go down, there's only one other way it can go. So that's why I'm looking forward for this one. Yeah, go on, mate.
Sideways.
Right, well, sideways, yeah, but this isn't euro sterling, so it's going to go one way or another at some point. But yeah, we could obviously just go sideways in there for ages. But yeah, I think it needs to build something down here. Otherwise, to start turning around this trend. Maybe it has already. We've got probably the longest bit of consolidation, if you ignore this noise, than we've had all the way through this dip from 112. But early days yet, we shall see. I think Mark grabbed a good trade in our room. I was looking at this one, but completely missed it this morning. We got down to 83.04, I think, was the low, 04.05 down here. I know he picked up a little bit there, and that might be a half decent trade, I think. But the bounce isn't looking overly strong just yet. But this is euro sterling. It could take 3 weeks to get up to 83.40. But yeah, I might have missed this one, but we've had a test and it's held. That's what I was looking for. So it's going to keep at least the range play going for now. What else? Not a lot going on elsewhere. My Aussie Kiwi still looks a bit undecided. We had a bit of a bounce, couldn't quite get up to the 50 level. Came close. Now we're back below my 108.15.20 area. This is just washing out a bit now. So again, I'm going to look at it as a bit of a pivot level rather than a trading level. If we can hold below it, then further downside beckons. If we get above it and hold it, then it keeps this move in play, sideways action, and potentially means we can push back up. If we crack through this low, though, yesterday's low down at the 90s, that would be a bit good news, because that will indicate maybe a little bit of a break, maybe down towards this low here or this 109.50 area as well. Okay, I'm going to pass it over to you, mate, because
Mhm.
there's not much else on my radar today, I can tell you. There you go.
Thank you. Yeah, gold. We are back. Let me just. We are back around that halfway point of the correction that we saw, and we are hanging around there. I think a lot of this has to do. Oh, yeah, the dollar got a bit hammered overnight. But also a lot has to do with Putin being pretty aggressive again and stuff not seemingly thawing over there yet in Ukraine, and then Israel already saying that the ceasefire has been violated. So I think one and all, and also as I keep repeating, don't forget also in the metal sphere. It's not only FX or bonds or equities having end of month flows. Metals have had several months now that I'm monitoring it, and we are seeing those end of month shenanigans as well. Look at it for it to the other side, for instance, in end of October, where we had like a pretty big drop on the last day of the month. So this one is a bit opposite. Look at what we did into the month end here in September. And September was relatively quiet, but I've noticed quite a few months where actually the metals are going for a walk as well, up or down for month end. So again, to me, it's going to be more important what happens next week than what happens today. Half of the New York market is out, even if they have a half day where they will be trading. Um, we can see some of those moves, and I would say now from here, especially watch out what's happening on the London 4 p.m. If there's anyone having to do anything specific for the last leg of this month in a market where liquidity will not be great. So if you see anything between 3 and 4 p.m. London time, do not be surprised. And if it gives you an opportunity to either take profit or enter at levels where it's interesting for you, it could be a nice one to have as well this afternoon. Well, have I been too cautious again? Bottom side of the box tested in silver, and we are going up again. As I said, it's still to me to be convinced that we're going higher again. It should really break back above 30.90, rounded up to 31 or so. But it's looking pretty big end of the month as well. So again, watch what's happening next week. If we start to push through from next week, then I think we could see a move higher, perhaps even into the whole of December year end. And I'm going to watch it very, very carefully. I was again put an order in at 29 and a quarter, but we went nowhere near there. So be it. Um, I'm going to pick up that cable again because I think that is what I was looking for. This 127.10 1040, 1035 zone. And I've said like, and as Ryan also mentioned, this is your 106 in the euro dollar really. And we spiked a little above. It depends where the line is, of course. But I think 127, 1030 is where we are going to watch it. If we're coming out of, we are out above it, for instance, for the end of month, I would not be surprised. Let's put it that way. If there is some last minute fixing to do, and then we could actually go all the way up. Why not push to 128? As I said, I have seen stupider moves over my career on an empty day that all of a sudden a currency goes for 100 pips walk. It can happen, although reasonably speaking, the most of the money managers will probably have done whatever they have to do. But come next week, I think this 127.1030 here is really worth a monitor on the cable. It may be decisive for the next sessions to come. Yeah. So, and as Ryan already said, if we fail, if we open lower, and there is a possibility that we are going to go back to test this wider trend line of the bigger move back down into the 125s is a dollar. If the dollar picks up steam, not going to repeat the euro dollar. It's 106, whatever you however you look at it, 106 figure 10. And that's where we are going to monitor what's happening for the start of the week. So I was saying, and I have to show it, right? This is the the owners of Majestic Wines. I told the people on Wednesday and yesterday that I was going to do my Christmas shopping. It was trading 48. Now it's trading 51. That's the only thing I want to say about all of this. So, but you guys were warned. You could
We
have
need an
avoided
ETF.
that.
We need
Huh?
a Cayman wine ETF.
Yes, exactly. All right, to finish the week here. Again, look at what's happening dollar Swiss. Also, don't forget to look back at what's happened last year in the Swissy. We could see a remake where Swiss franc has been bought. I would say that if we see more Swiss buying, I would suggest or suspect that we see perhaps a bit of S&P activity if we take either Euro Swiss or both Euro Swiss and dollar Swiss below. But 86 the figure, we're still on it. 88, sorry, 88 the figure, we're still on it. If you see a real break here, we could be in for a little bit of a late acceleration this month. So be careful what you do here. And then there's two that I'm monitoring actually to start next month, really next month. It's Euro Aussie, 162.5 we're turning around, but it's starting to look like we find a bit of resistance there. But I would say especially 162.80, 163 the figure. That is what I'm going to monitor. I'd actually would love a move back up here to try and counter it. And the other one is Euro Kiwi. For the amateurs, look what's happening here, and look back, 179.30. It's somewhere. It's a bit of a strange one. 179.30. Been trading well here, here. Here we moved around. Here we stopped right on it. Here we stopped on it. Here we stopped on it. And look what happens the past few days since the RBNZ is that we are hitting our head again against this level. So here too, I'd love to have a bit of a move up there. To give it a go, and the risk is not going to be very big. I would say your risk zone is around here, 180, 180.20, 179.90, 180.20. That's percentage-wise really a very low-ish risk because if we start to move back through those prior highs here, I think it's perhaps useless to try and fight it. But it all comes within the framework of my view on the euro still that I have right now. And now we have the RBNZ behind us, but we are ahead of the ECB. I think it may be worth having a look at it. At least those are two pairs that are on my radar. And with that, I'm going to call it a day. Derish, I had a bit of both, red and white, and I even bought some rosé wine because my kids kind of like it too. So I need to please everybody. So I had a bit of everything there. Alrighty, Ryan, back over to you.
Thank you very much, mate. Good stuff as always. Ali, going to just have a quick look at your euro. I'm going to be honest, I don't like your levels. It's a bit in the middle. I think you're just trying to chase a move, particularly yesterday in a very quiet market. We've been warning about liquidity and whatnot. So it looks like you're just trying to chase a move a bit in euro dollar instead of taking a fresh eye and sticking to where the levels are. You don't have to trade. If you've got your tried and tested levels, then obviously trade them. But a bit of a difficult one yesterday. So I hope you fare better today. I'm going to grab the screen back quickly because I'm going to give you another quick offer that I've just decided to do. Can you see that all right, Kay?
Yeah.
Yeah. Okay. So we've got our trader coaching program, which is undertaken by all the team. But as it's Black Friday, I've just decided off the cuff, I'm going to give everyone a special offer just for today. Forget all this stuff here, and there's no code because, as I say, I've just made this up. I will give you a buy one, get one free offer for today. I'll put my link there in the Zoom chat. If you want to take advantage of that, just go to that link, go down to the bottom, and just use the contact form. Send me a message saying you want to take advantage of that offer, and I will sort that out with you. So buy one session, get one session free just for today. That offer's running because I'm feeling generous as it's a Friday and everyone's had a busy week. So
by the way, just wanted to comment on Ali. You didn't review my trades yesterday. I did, but if you look, I showed nearly all the charts that you were talking about. I did not particularly voice any opinion, perhaps, about your trades, but we do review and we see what you're putting there, Ali. Don't worry. We are reacting to
I'm
it.
sure we went through a couple of them as well.
Yeah,
like euro, dollar, and whatnot. So yeah, okay. Yeah, well, we look after you, Ali. We've looked after you ever since you joined the show. So good stuff. All right, we'll call that a day. Thank you very much, everybody, for coming to the Flow Show. I hope you've all had a good week. And yes, thank you, Naresh. I've got a long day tomorrow, 5:30 kickoff, which means I need to get in the pub for at least 10:30 in the morning for that 5:30 kickoff against our arch rivals, Arsenal. So, yeah, I might be in a good mood Monday or I might not. If I'm in a bad mood Monday, then I'm going to double the price of my coaching courses. Only joking. Right, have a good one, everyone. We'll see you all next week.